Welcome to the Leaders in Payments podcast, where we talk to C-level leaders from across the payments landscape. We'll be discussing the products and services that impact the payment space today, as well as trends and predictions for the future of payments. We will also hear stories from our guests about their journeys to the top.
Hey everyone, this is Greg Myers, the host of the Leaders in Payments podcast. And before we get started, I wanted to remind everyone that next month, March, is Diversity and Inclusion Month. If your company is interested in learning more, whether you want to be on the show or sponsor the show, please reach out. Now, on to this week's episode. Our Open Banking Pulse this week is on Trustly VP of North American Bank Partnerships, Eric Foust. Not only is Eric a 20-year veteran in the banking space, he's also the first VP I've had the pleasure of speaking with that has almost a superhero theme to his roles and responsibilities within the Trustly empire. His chosen staff, a trident. And the responsibilities represented by these three prongs are 1, facilitating all of Trustly's bank partnerships, 2, overseeing all of Trustly's open banking support for FIs in the U.S., and 3, collaborating with bank partners to become resellers of the Trustly product suite. For those of you that may not know about the Trustly brand, they processed more than $10 billion in 2021 with more than 10 million users in the U.S. Tune in this week to hear him share his invaluable perspective on the open banking concept from the front lines, including the 3 pillars of regulation, lessons from across the pond, and what the future looks like as related to standardization and 24/7 365 banking. We've got a great episode ahead, so let's get started. Hi, Eric. Thank you for being here and welcome to the Leaders in Payments podcast and more specifically this special Pulse of Payments episode where we're going to be talking about open banking. So thanks so much for being here.
Thanks, Greg. Appreciate you having me.
Absolutely. So let's dive right in. Tell our audience a little bit about your background and your role today at Trustly.
Yeah, so background, I was just thinking about this. It actually pains me to say this, but I'm now officially a 20-year banking vet. Started out in the branches, moved into relationship management roles, had some treasury management experience, moved into products and product innovation. And then I spent about 6 years at an entity called Early Warning. Early Warning is owned by 7 of the nation's largest banks, and they also own the Zelle network. So I helped them launch the Zelle network back in 2017. Spent a lot of time there in the product role, created, developed, and launched the corporate-facing version of Zelle, which is called Zelle Disbursements. And then most recently, this past September, I have made the transition to Trustly in my current role as VP of Banking Partnerships. So when I describe my role, I typically refer to it as like a trident. There's 3 prongs on there. The first prong is I'm responsible for all of Trustly's North American banking relationships concerned with ODFI, so originating depository financial institutions, the entities, the banks that help us move money for our merchants. The second prong is what I think we're going to be talking about today, and that is how Trustly is engaged with financial institutions who are supporting open banking here in the U.S. And then the third prong is working with banks specifically on the corporate side in the treasury management and merchant services divisions, enabling them to become channel resellers of the Trustly product suite.
Okay. Well, let's talk about Trustly. So tell the audience what Trustly does.
Sure. Yeah, so we are a global payment platform for digital account-to-account transactions. We enable consumers to pay or get paid directly from their bank accounts. And that typically happens at a significantly lower cost compared to card transactions. And we also guarantee that payments, which means no chargebacks to our merchants. Our product suite includes things like the guaranteed payment product, instant payments, account validation, and there's a whole plethora of other services that we support. Just to put some data around Trustly, we processed more than $10 billion in payments last year, and we have more than 20 million users here in North America, and that number is growing significantly. To give you an idea of just the growth here at Trustly, when we looked at year-over-year revenue growth in North America, we increased it last year by 537%. When I came on board at the end of September, I think I was employee number 198 or 200. I didn't get confirmation before this, but just to give you an idea, 4 months later, we're going to be hiring our 300th employee here in the very near future.
Wow, that's some pretty incredible growth, both on the revenue side and the employee side. So congratulations for that.
Thanks.
Before we dive deeper into the conversation, can you tell the audience how you define open banking?
Yeah, so Open banking, it depends on who you are, and try to describe it as this ecosystem or with actors who are a part of this ecosystem. So the main character involved in open banking is always going to be a consumer. They are central to the ecosystem of open banking. And then you have a merchant. This is typically an entity that has something the consumer wants. Then you have a bank or a financial institution. This entity essentially holds all the keys to the kingdom. They hold the payment mechanisms. They hold all the consumer information that's needed in order to process a request. And then you have a fourth actor, and these are third-party providers, or think of them as like fintechs. These entities are creating the technology. They're innovating on and stitching together how the consumer, the merchant, and the bank can interact with each other. And they do this through sharing data. So at the core central theme of open banking, it's giving the consumer the ability to go to their bank and say, bank, I would like to share my data with ABC merchant. And that data sharing occurs via APIs that often these third parties that are involved, these fintechs, code up to so that they are supplying the information in a safe, secure manner to their merchants. That's the basic gist of open banking, but it can get much, much more complex.
Okay. And it's safe to say that a typical transaction, and tell me if I'm wrong, is a consumer buying something from a merchant. And typically there are card options, right? You're going to use your MasterCard, Visa, or whatever, but Trustly is another option. And with that option, they basically get displayed something that allows them to put their bank credentials in. And then you guys go to work then to make sure they have the money in their account. And then the money gets sent to the merchant and everything happens on the back end. Is that a safe explanation?
Yeah, that's you're hired. That's absolutely a safe explanation. So we remove the friction from the process from the consumer having to go and fetch their account information. We also provide stability to the merchant that this is a bank verified individual. So when we go out and fetch the consumer's information from their bank through our connections that we have with those financial institutions, it's a guaranteed transaction.
Okay, perfect. So on previous episodes, we've talked about how open banking can benefit merchants in certain verticals like e-commerce, travel, fintech. So now let's turn to the banks or the financial institutions. Let's start the conversation sort of at the top of the strategic level. So why does a bank want to get involved with open banking initiatives?
Yeah, so I think in order to answer that question, you have to look at like where we're coming from. This whole concept of open banking is to provide safety and security and make it fast and easy for consumers to share their data. And that may not have been the process in some folks' eyes, specifically at banks for the past 20 years. Sharing data has essentially been the wild, wild west, where you have these merchants who are trying to remove friction from the process. And they have consumers who want things to be safe, fast, and easy. And then you have entities that are trying to create easy connections to banking applications so that they can grab that information from the consumer provided to the merchant, and it's a validated, verified transaction. Well, there's no standardization across the board. And some entities out there, they could be abusing the system. So they are going out and accessing the consumer's information on a daily or nightly basis, and it puts a burden on the bank's servers. And then when you look at it from the bank's point of view, these consumers are giving their online banking credentials to some of these third-party entities out there. And when you do that, you're giving away the ability to do a lot of things within the online banking application. You can move money in real time if there's a bad actor out there. So the banks have said, listen, guys, there's a use case out here to be had, but it needs to have structure in order for us to support it. It needs to be safe, and we need to have some sort of validation or vetting process in place here so that we can verify that our consumer is, in fact, giving permission to these third-party entities so that whenever they are processing a request to share information, whether that's account information or whether that's actual payment information, it happens in a safe, secure environment. So the banks had two different options or two different avenues that they could have gone down. They could have said, you know what, we're going to prevent all of these transactions from happening. But then that would have been at the expense of their consumer. And they didn't want to do that. And I'll give you an example, kind of like just rooting it in real life. For me, I had a real life need for this. I had to refinance my mortgage last year. And coming from the banking industry, I kind of knew what was required of me going into the refi process. I knew the package that was going to be required. And I was not looking forward to it. So I did my due diligence, found a lender online that could supply what I needed. They had the best rate for what I was looking for. And during the application, very early on, they said, here's your checklist of all the things that you need to do. And if sure enough, it was, 3 months of bank statements. It was employment verification, address verification. The list was extremely long. But then right below that, it said, if your bank is one of these banks in this box, your bank may be able to share this data with us and we can eliminate some of the tasks for you. So luckily, my bank was one of the banks that was listed below. And sure enough, whenever I entered my information in there to allow them to start sharing my bank, to start sharing my data, the to-do list started having things crossed off of it. And I walked away from the application process delighted. And by no means did I go into this process thinking I was going to have any sort of enjoyable experience for doing a mortgage application. At best, I was thinking, maybe this is something that I will walk away with being slightly annoyed, but it was certainly much more an appreciation for my financial institution allowing this sort of service to happen and putting that as a value add for me as their customer. And so now the expectation's been set that if I have to do this again, I won't settle for anything less than the experience that I have already had. And it's because my bank was providing that mortgage processor the information in the way that's in an open banking format.
Okay. I think that's a good segue into the next question. So is open banking a strategy that most banks are considering, or is it more of a consumer-driven initiative and they really have no choice to do it because their consumers are asking for it?
Would it be considered copping out if I said a little bit of both?
It's probably the right answer, so go ahead.
Yeah, it's certainly a consumer-driven initiative, right? The consumers are the ones who are driving the want and the need for this. If there wasn't a consumer in play, this wouldn't even be a discussion. But as consumers in our day-to-day life, we look for ease and convenience. We want technology and electronification of things to replace paper methods. And that's what open banking is doing for us. So is it a strategy for banks? I think it's now become a strategy. And if it hasn't already been solidified as a strategy on a bank's roadmap for 2022, it certainly will be for 2023 and going forward as well. This is something that's definitely not going to be going away. We're only going to see more focus, more increase in open banking in the U.S., specifically as things like regulation and standardization become a part of the norm.
Do you see in the marketplace different size banks adopt this more differently than others, smaller banks, larger banks? Is there a difference in where and how they position this based on their size?
Yeah, so great question. And I think it all depends on what you mean by size. Are we talking number of deposit accounts, number of digitally active consumers, size of assets? I certainly think that the bigger banks, the top 50 banks, have a very large focus on this because they serve a very large consumer base. But you're also going to see banks who historically don't have giant deposits on hand, but they have a large online presence with the number of consumers they represent gravitating towards the open banking infrastructure because their consumers are the ones who are leveraging the online world to transact. And they want to be front and center of that. And they want to be looked at as enablers, not a disabler for their consumers. So value add, not a value hindrance for their consumers.
Okay. And then how do they position it with their consumer, their customer? I mean, obviously they want to make it a win-win. Are they proactively telling their customers that they can do this, that it's okay to do this? How does the bank take this concept and make it a win-win?
In my experience, specifically dealing with this, it was kind of like, oh, I didn't even realize that my bank was supporting something like this last year. They do have marketing campaigns out there. There's this movement within the banks to address this whole data sharing. The data sharing has kind of been this concept of it's a black hole, right? You don't know, as a consumer, you don't have clear insight into who your bank is sharing your information with. It's in your terms and conditions, but you don't have a nice, neat place to go to say, oh, I'm sharing my data with ABC through my bank. Well, open banking is going to allow consumers to go to their bank and access a portal within their app or within their desktop and literally see who they're sharing, who they've allowed to share their banking information with. And the neat part about this is it gives the consumer control. So it makes it easy for them and it gives them full control to say, yes, I want to keep letting my bank share my data with this merchant or with this entity, or no, I want to stop sharing my data, and it happens in real time. So they're able to shut that off right now. And then going forward, their data is no longer being shared with that entity. So when the banks are looking at their consumers and what sort of value add does this give to the consumers, it's not just, hey, it's going to make it easy. It's also going to make it more safe for you. And we're going to give you more intelligence or more insight into who has your data. I remember that I got my first cell phone with an app on it, like back in 2007. And I signed up for one of those PFMs, and I can't remember if I ever shut them off. I'm pretty sure I did. But with this sort of open banking infrastructure, I'll be able to have much, much more control and visibility into who I've shared my information with and disallow it whenever I see fit. Because sometimes you only need to share your data for a day or a period in time. You don't need to have ongoing sharing with these sorts of things.
Right. And I think you already mentioned this, but I want to dive a little deeper. And anytime we talk about banks, obviously the regulatory environment comes up. So walk us through what the issues are that the banks face on the regulatory side when it comes to implementing these open banking initiatives.
Yeah. So the thing with the US is right now, the regulation has not been solidified for open banking. The Dodd-Frank 1033 has been issued, and it's going to be coming out here in the very near future. We're expecting it to come out in April. If not April, it might get pushed back into 2023. But we've had the advantage of learning from our counterparts across the pond and what worked with data APIs and payment APIs with PSD2 and what will eventually become with PSD3. So when we're looking at the US landscape for open banking, all this is being done right now without any sort of regulation being imposed. It's certainly being talked about, and the CFPB has asked for feedback, and it's something that's, we can tell is coming down the pike. Again, our counterparts over in Europe are 5 to 7 years ahead of us. But this is really an initiative that's been sparked by the consumers. And when regulation comes out, we can be absolutely certain that the CFPB is going to keep the consumer at the center of focus, and they're going to mandate that open banking be safe, fast, and easy. Those are going to be the 3 pillars that the regulation hits on. And as such, I feel like when the regulation comes out, that's going to give much more certainty to the industry. And we're going to see a lot of innovation coming out of the open banking APIs that get developed.
And do you think there's a part of that regulatory thing, I don't know what to call them, but what you'll have to be compliant with and all that, is that going to be tied into sort of your protecting your personal information and the rights that consumers have to opt out of things? I mean, I know obviously you have that already in Europe, and there's talks about it in the US. A few states, I think California and maybe a couple others, have passed state laws around protecting your personal information, but there's no national or federal type of law. So do you think that's part of it as well?
I hope so. It makes things a lot easier whenever things are standardized across the landscape. One-off use cases tend to add friction into the process, or at least pockets of friction that need to be identified and addressed individually. That could cause a rift in the user experience. That also causes some diversion of resources. It would be a best-in-class approach if it was standardized nationally, as opposed to going state by state.
Sure. Are there specific benefits that Trustly brings to your bank partners that maybe your competitors don't?
Yeah, absolutely. So we pride ourselves with our bank partnerships, and we have a clear understanding of what the banks have done over the past 10, 15, 20 years to get themselves in the position that they're at. When you look at a bank and you poll consumers on who do they trust the most, typically the response is, or the majority of the responses is going to be the bank on their phone when they're looking at apps. And we want to make sure that that is front and center. We also want to make sure that we are propelling the bank's investments in certain items or certain things that they've created. For example, the real-time payment network that the clearinghouse launched back in 2017. Trustly supports the real-time payment network through our banking partnerships right now, so you can do instant payments. And we are innovating with our banks heavily to help garner more usage for the RTP network, specifically around the RFP, the request for payments use case. trying to address that with the lens of removing user friction from the current process. And so we're engaged with our financial institutions who offer RTP as a service to us to help remove some of that friction and really partner with them. And then when you just look at our guaranteed payment product or any of our payment products, the partial guarantee or the no guarantee, we keep the bank at the center of the consumer experience. So that consumer is going to have the brand experience and understand that their financial institution is providing this service for them so that they have a value add anytime that a consumer chooses Trustly for a payment service. We promote the bank in front of them to make sure that the eyes are wide open there, that the bank is getting the recognition for that.
And I assume you're involved in the FedNow launch that will be coming up in the next, year or so?
Yes, we are. Man, you blink, you spend 40 years of just, using ACH, and all of a sudden you blink and now there's 2 new real-time payment rails. So yeah, FedNow, we are absolutely a part of that, and we will be supporting FedNow payments as well in all aspects. So their request for payments as well as their push or their send transactions. It's an exciting time to be in banking for sure.
Absolutely.
24/7, 365 banking. How things are going to change whenever you start seeing, your mortgage payment coming out on a Saturday at 12:30 a.m.
Right. If you don't mind, could you walk through a scenario of how Trustly and the banks work on the request for payment side? And I know we haven't talked about that much yet, and given the open banking initiatives we've talked about. So I'm curious if there's a use case that you could describe for the audience.
Yeah. So think of like a bill pay scenario, right? I mean, that's where request for payment comes into the conversation. There are consumers out there who don't want to tie their credit card or their debit card to a bill pay scenario. The user experience today has the user or the consumer jump from application, the biller application, back to their bank application, back to the biller application. And oftentimes that can be a very clunky process, and it results in consumer drop off. So our mission has been working with corporates, so billers, as well as our banks, to address that use case and reduce or eliminate entirely the need for the consumer to jump from the merchant app back to the bank app and then back to the merchant app, having everything occur within, we call it a light box. So that way the consumer is essentially on the merchant page the entire time. And behind the scenes, Trustly is navigating the origination of the request for payment from our ODFI, and then waiting for the consumer's bank to receive that RFP and then presenting it to the consumer in session while they've already logged into their bank using Trustly.
Okay. Thanks for walking through that. From a banking perspective, where do you see open banking heading, say, in the next 2 to 3 years?
Regulation, standardization across the board. I certainly see that as being a reality. I also see the number of banks who have exposed APIs, either directly or indirectly through aggregators like Akoya, increasing dramatically. I think in 2022, we'll see a couple handfuls of banks with APIs that are fully exposed to support data sharing as well as payments processing. And then with entities like Akoya in 2023, that number is going to be exponentially larger. And then 2024, I think you're going to really start to get to maybe not total ubiquity, but a lot of the smaller sized financial institutions who maybe don't have the technology departments staffed or resources available to create these APIs will be going through other aggregators. So the vast majority of US banks should be participating in the open banking ecosystem within 3 to 5 years, I'd say.
Well, Eric, we've covered a lot of ground on open banking, and definitely like the conversation around all the banks and how they work and you work together with them. Thank you so much for being on the show today. I know your time is very valuable, so I really appreciate you being on the show.
Yeah, absolutely. Thanks for having me, Greg. I appreciate it.
Absolutely. And to all you listeners out there, I thank you for your time as well. And until the next story.
Thank you for joining us this week on the Leaders in Payments podcast. Make sure you visit our website at leadersinpayments.com, where you can subscribe to the show and where you'll find our show notes. If you enjoyed listening, please share on your social channels as well.